Okay, everybody, welcome to the webinar. I just wanted to share with you some not only some new tax laws, but then also your tax code and share the secrets of using the IML business for greater tax savings. So the biggest thing I want to share with you guys, I'm gonna go into some detail on some new tax laws that you really need to know for your business. And then I'm going to share with you on the back end why IML is one of the greatest businesses I've seen. So, and why network marketing in general. So if you cannot hear me, please let me know and I will make sure that that is taken care of. But just a little details about me personally. My name is Courtney Epps and I am from Greenville, South Carolina. And I am a fractional CFO for about 18 companies, ranging from $500,000 a year to $6 million a year. And I've been an accountant for the last 17 years. I graduated from Coastal Carolina University, and I worked at some large regional CPA firms during and after college. And I specialize and have for the last 17 years in corporate tax, business, and payroll taxes. So, you know, amending tax returns, all that stuff, anything involving accounting and taxes, I handle that. And then I owned and operated a large insurance agency and an accounting firm in Myrtle Beach, South Carolina, where I had 3,500 clients, and I sold that about 7 years ago. And I work from home currently. So I have 6 children, and me and my husband, we're stay-at-home parents, and I'm able to run my accounting practice from home, and it's been an amazing, it's been amazing for us. So my story, you know, just kind of went from doing traditional tax preparation to helping the average family keep more of their money. And you know, I learned a couple things being involved in network marketing companies, that it is truly the home-based business is a way to save $4,000 to $8,000 a year in taxes. And so I'm going to share with you why families are overpaying that much money in taxes and why that's so important. I heard some statistics and I actually went and looked up these statistics, and it really bothered me about a month ago. And so the average household makes about $60,000 a year, and they're paying on average of $14,000 in taxes. Now that brings them home, their take home is about $46,000 a year. And the cost of living in America, the average is $53,000. So the average household is going into debt $7,000 a year. And so they're going to credit card debt, they're going in student loan debt, they're not able to pay their bills. And so, you know, the 46% of Americans don't even have an extra $400 to their name. So it baffled me how people were not getting started in a business, why they weren't, you know, starting their own home-based business and to save money in taxes. And the reason why is because they didn't have the extra money. 66% of Americans don't have an extra $1,000 to their name. So it's my job to help people understand that there are some massive tax savings, and I'm going to share that with you as I go along. But there's some new tax code. I'm sure you've heard the media on it, and what it means to you is there are some great savings for small businesses, but there are tons of lost deductions for individuals, and it's never been a better time than now for someone to start their own business. Now, all the savings that you receive from these tax law changes are not automatic, and there are some things that you need to know and do before the end of the year in order to make sure that you get these deductions. So what is your part? I mean, here's the one thing. People need to understand the difference between filing your taxes and tax planning. And so I have so many people tell me, well, my accountant handles my taxes. Well, the problem with that is that most accountants don't have time to do tax planning, and most of the time you're giving them your information during tax season, which is after the year. So if 2018, if I'm if I'm looking for tax deductions for 2018, it's going to be extremely hard for me to receive any sort of benefit if I'm waiting until 2019 to meet with someone. So understand, and you guys know that very well, that knowledge is power. And in order to be a 2%er, we've got to make sure that we're disciplined, we're consistent, and we're coachable in all aspects of our life. So I'm going to share with you now some of the changes. The standard deduction has increased to single is $12,000, married is $24,000, and head of household is $18,000. But the problem with this is that the personal exemptions are gone. So people think that they're going to be making more money or saving more money this year, and that's just not the case. So with a family of 6, we're actually losing about $20,000 in deductions this year. Now, there's a couple things with the child tax credit that has increased to help offset that, but still understand that the IRS or the government did not give us a benefit. They took away something as well. Now, itemized deductions have decreased or disappeared, some of them. The homeowner's deduction for interest has now dropped in order to, you can claim $750,000 worth of interest on a property instead of $1 million. So that's, if you have a really expensive home, that may come into play. Interest paid on home equity loans now are no longer deductible unless that home equity loan was taken out to repair your home. Then you've got casualty and theft losses. They're denied unless it's a federal disaster. So last year we had a huge mold claim and we did not have coverage for insurance. This year that would not have been allowed as a deduction. And then job expenses and miscellaneous business expense deductions are gone as well. So I have a lot of clients that are able to claim or were able to claim in prior years, travel and mileage for their work that they worked at to get that deduction, and that is now gone. So just make sure you understand that. There's now the property and state and local taxes are now capped. So I have clients who pay upwards of $20,000, $25,000 in taxes throughout the year, but now they're capped at $10,000. So you can see, property, state, local taxes add up. This here was $18,000. You can only claim 10, so you lost a deduction of $8,000, which is huge. And then, the biggest thing I want to share with you guys, and there's some more laws, and I'll be happy to go over the new tax code with you in further detail. But I want you to understand that, there's never been a better time to own a business, and I said that before. But if you're an employee, the taxes that are deducted from your paycheck are based on your payroll income. So if you have a loss from a business, you can actually offset that income, and you could lower your tax bracket, and it goes dollar for dollar against any other income that you may have. So I'll share with you just a, Jane, this is just a for instance, and I got this from a book called Lower Your Taxes Big Time, a guy by the name of Sandy Botkin. And so Jane and the average person is going to go out and say, hey, you know what? I need to make an extra stream of income, or I need to make some more money. So they go out and get another job. Well, what ends up happening is that job, let's just say they make, $20,000 extra a year. They're paying state and federal taxes. They're paying Social Security taxes, car expenses, child care, business clothes, all of those deductions. And then they're left with a take home of less than $1,000 for the entire year. So people go out and they spend money based on what their gross income is, not even taking into account all of the deductions that they have. So in this same scenario, if Jane were to go out and start a home-based business and have $20,000 worth of extra income from that business, some of these expenses would go away, but the others would actually be redirected into something called business expenses. So her living expenses that she has, instead of them being living expenses, she can start deducting her cell phone and her meals and her mileage. And so she's actually getting a massive tax deduction, paying less in taxes and bringing home more money. So other advantages of having a home-based business. You need to understand that you will never maximize your income potential until you learn that there are two tax codes and tax systems in this country. And you have got to find a way to get your taxes down to the legal minimum. And the way to do that is to be not a salaried employee, but to be a home-based business owner. And how you do that is just exactly what you're doing now. Joining a network marketing company, joining a direct sales company. You're in business for yourself, but you're not in business by yourself. And not only can you make an extra stream of income, but you can also save what I'm finding with clients are between $4,000 and $8,000 a year just by starting that part-time home-based business. Now, what is a tax-deductible business expense? So the IRS is pretty clear on this. It says any expense incurred for the purpose of gaining or producing income, which means you're attempting to earn income, and incurred with a reasonable expectation of resulting in future business and is reasonable under the circumstances. So to break that down, it just means that if you are attempting to earn an income either today or in the future, and it's reasonable, then that would be considered a business expense. So redirecting your expenses that you're already currently spending allows you to take deductions for expenses that you're incurring anyway. So that becomes really fun. So here's some things that you can deduct. Office supplies, paper, printers, laptops. If you're doing presentations, projectors, PCs, all of that can be deducted. Advertising, so if you're posting on social media and spending money there, you can write that off. Business cards, flyers, a percentage of your internet. So if you are, if you have a home-based business, which most of you do here, you can write off a percentage of your business use of your internet, telephone, and cell phone. So home phone and cell phone as well. And then cost of goods sold, that would be products that you are using for resale. So if you have any of those, you can write that off. And then travel. So, a lot of people don't realize, but, all of your travel, if you're going to events, if you're going to meet a prospect, if you're going to meet a teammate, then you can write off that. So you can write off the lodging, you can write off the tips, you can write off 50% of your meals, and then the transportation to and from. So if you're flying or if you're driving, I'll go into detail on if you're driving, how to write that off as well. So what you can deduct. So you've got accounting fees, legal fees, license fees, child care, cleaning, janitorial, all these things. I have my children, actually, I pay them, and I'll share that with you, but I pay them to clean our house. We work from our home, and so I have a lot of people that come in and out. So, that's janitorial fees. Commissions to outside parties. So if you hire somebody to do work for you, consulting fees. So if you hire a consultant to help you run your business or grow your business, any software that you're using to run your business on a day-to-day basis is also deductible. And then subscriptions, which are your monthly dues that you're paying. You also have insurance premiums, including medical, and most people don't know that, but that's huge. So to be able to write off 100% of your medical insurance is a big deal for a business owner. Retirement contributions, so you can set up SEP accounts and IRAs for yourself. Continuing education, so this is huge. Going to training events or webinars, events that charge a fee, you can write that off as continuing education. And then there are tons of fringe benefits. So I won't go into major detail on that, but fringe benefits is probably one of the most exciting things for me. It allows you to be able to write off things that you couldn't otherwise write off. So in the event, you can hire your spouse, and your spouse can in turn pay your medical bills and for your family, and then you get massive tax deductions on that. So that would be something we would need to talk about, and how to set that up and structure it properly. Bank charges. Meals, you can write off 50% of your meals for business meetings and out-of-town travel. equipment, taxes, subcontractors, if you hire somebody to help you. Now, vehicle deductions is one of the most profitable ways to save money as far as taxes go and business expenses. You can save hundreds of thousands of dollars over a lifetime if you do this properly. And there's two methods to claim for vehicle deductions. One is the standard mileage deduction, and then the other one is the actual expenses. So standard mileage is just like it sounds. So you get to claim miles. So it's currently 54.5 cents per mile that you can claim. It's considered the shortcut method with the IRS. So you can't claim anything else like your gas and oil and repairs, and there's no depreciation. So an example of this would be you put 15,000 miles on your vehicle for business purposes, and you would times that by 54.5 cents, and that would be a total of $8,175 in deductions that you get to put off of your tax return as far as not paying taxes on. So that's great. But understand that with the new tax law, this is almost never a good idea. So the actual mileage is better now. And so in order to figure actual mileage or actual method, you would claim your business usage and whatever that would be. So if you have your business mileage is 8,000 miles and you put a total of 10,000 miles on your car, then that would be 80% business usage. And so what you would end up doing is you would track all of your expenses, your gas, your oil changes, the repairs, the supplies, car washes, and you multiply that total by your business usage. So if you put $12,000 worth of actual expenses, you would times that by 80%, and that would be $9,600 in deductions. Now, not only do you get that actual method, that $9,600, but you also have depreciation as well. So here's where it gets really exciting. Now, understand these changes in depreciation, you have to buy a vehicle in 2018 in order to qualify for the 2018 depreciation. But it doesn't have to be a new vehicle. It just has to be a new to you vehicle. So just to give you an example, I bought a 535i BMW last year in December. And so last year I was able to claim $11,160 for the depreciation on that vehicle. Now, year two, which is this year, I would only be able to claim $5,100 in depreciation on that, meaning that over time, it would literally take me 18 years to depreciate my car. Well, if I buy a new vehicle this year, and that is definitely the plan that is happening, I will get a $10,000 depreciation deduction this year, but next year is huge. The difference in year three, which if I keep my car, next year I would only get a $3,000 deduction, as opposed to if I buy a new car this year, next year I would get a $16,000 deduction. That would save me about $6,000 in taxes. So to understand, this is one of the most exciting things that has happened in the new tax code. I mean, I love it. So the new tax law now allows depreciation in 5.3 years as opposed to what it used to take 18 years to do. So if you have a vehicle that's over 6,000 gross vehicle weight, you can actually skirt around the rules. So you just have to have a qualified truck, van, or SUV. And it allows you something called a Section 179 deduction. And what that means to you is that Section 179 just says, hey, if you have an income from your business and you were to buy any equipment or vehicles, then you are allowed to write off up to your net income 100% of the vehicle cost or the equipment cost this year. So if that vehicle were $50,000 and you had a truck, gross vehicle weight of 6,000, and you use 90% of it for business, you would actually be able to write off $45,000 this year. And whether you've paid a payment on it or not, the fact that you've actually taken that vehicle into custody allows you the tax deduction, which is huge. Now, another Another deduction that is huge for me, especially, is the home office deduction. So it's very powerful because of the new tax law changes. When I talk to you about the capped property tax, which is, capped at $10,000 now, you're actually able to recoup some of that, and also the mortgage interest on your personal return is able to be recouped. And so home office deductions are listed here. So these are all the things you can write off if you have a home office. Now, what qualifies for a home office? I am not saying that you can use your kitchen table as your home office. You have to actually have a location that is specific for your home office. So it cannot be in a bedroom where you have a bed, a guest bedroom. It has to be actually donated for just an office. So these are some of the things you can write off: your mortgage interest, your property taxes, utilities, homeowners insurance. So this is a 10% deduction. So say this house was 1,000 square feet and they had a 10 by 10 or 100 square feet home office. So they're able to claim 10% deduction on all of these expenses. So, the tax savings on that is about $2,200 in a year. So that's huge. I see on average of $3,000 to $5,000 a year in tax savings just by having the home office deduction. And I have so many people say, well, what if that triggers a red flag? And the thing is that you're not any more likely to be audited by having a home office deduction than you are having vehicle expenses. And if it's true tax deductible, I would say claim it. And, I've never had a client audited in the last 17 years, and that may change tomorrow. But the thing is that if they're true expenses and you're attempting to earn income, then take the deduction. And so at the end of the day, we can help you with that if anything ever were to come up. But we're just not seeing a whole lot of that. So, in 17 years. Now, this is something that I love. I have 6 children. Hiring your kids. I have a 16-year-old who actually works for me. She does data entry for my accounting practice. She does a lot of other things. I have another daughter who helps me do paperwork, filing paperwork. And so, I have kids that help me just run errands. And so hiring your kids, kids are expensive and they want stuff, lots of stuff. Like they want to go to college, which is great, but they do sporting events and they do dance lessons and they want smartphones and they want PlayStations and all these things. So you can actually hire them to work for you in your business, and they can turn around and pay for their stuff. So the cool part about that is that the first $12,000 that you pay them, not only do they not have to pay taxes on it, if they're under the age of 18, I'll share with you how it's even better, but the standard deduction now is $12,000 for a single person. So not only do they not have to pay the taxes on the first $12,000, but you get to claim it as a business expense. So that's huge. The other thing is that because they're your children, if they're under the age of 18, you don't have to pay Social Security tax on them. You don't have to pay FICA tax on them. You also don't have to pay unemployment taxes on them, because children are not allowed, and your children, your family members are not allowed to obtain unemployment from your company. So none of that stuff has to be paid. So it saves you thousands and thousands of dollars. So if they're over the age of 18, you do have to take Social Security and Medicare out for them. So just understand that. Now, here's another huge deduction that came out this year. It actually kind of takes the place of the personal exemption that we lost. It's called the pass-through entity deduction. So what it does is, just say you've made $50,000 this year for your business income. Well, if you take that $50,000, you're actually able to take, on top of that, a 20% deduction called a pass-through entity deduction. So that means that you get to claim $10,000 of that 50 as another deduction. So it actually just lowers your taxable income. understand with this, if you are considered to be an S corporation, you are required to pay yourself a paycheck. So make sure that if you're set up as an S corp, that you get with your accountant before the end of the year and make sure that you've paid yourself something reasonable in order to claim that 20% deduction, because that is a big, big deal. Now, I always teach people that they should have an LLC. And one of the reasons why is because it limits your liability. So most people get involved in network marketing or home-based business and they just start with their name, and that's okay. But when you start making money, you definitely want to transfer that into an LLC. And the reason why is, one, the liability, it limits your liability, but it also allows you to treat your business as an S corporation for tax purposes. And it's one of the biggest tax deductions that you could have. So what it does is it allows you to bypass self-employment taxes almost completely. So like I said before, you have to pay yourself a paycheck or a reasonable salary. But so if we have an example here would be, $60,000 worth of income for your business, you would not have to pay 15.3% that a normal sole proprietor would have to pay in taxes. So it's saving you almost $9,000 in taxes just by setting up an LLC and treating that as an S corporation. So there's further tax advice to go along with that. So get with me or get with your accountant and make sure you understand how to set that up properly. Now, here's the benefits of why IML. I didn't know much about IML until a couple months ago, and I reached out to Ed, and I'm like, why this business? And he sent me the video, and it just made sense. It was awesome that you can give people that education. But the biggest thing here is that even as a customer, you're actually allowed limited business deductions. So even if someone decides to sign up right now and they get involved in just the training and trading, then they actually are able to claim those business deductions because they're considered a trader. Now, the one thing you need to understand is that you have to trade regularly. So you can't just say, I'm going to trade every month, once a month. It has to be done on a regular basis. And I like to tell people, you need to spend at least 30 to 45 minutes a day on your business, 3 to 5 days a week. So, you need to be trading regularly. You're also taxed at a lower rate than ordinary income when you're trading. So that allows you to become wealthier faster, which is awesome. So capital gains actually from trading can be as low as 0% and no higher than 20%. So that is huge. Whereas the average income in America, they're paying about 35 to 40% in taxes. So, and as a rep of the company, you get more tax deduction. So when you start actually sharing this with people, you're going to get to claim more and more and more. So that is one big advantage that I've been able to see. Any other network marketing company that you could get involved in, they're going to have ordinary income. And as a customer, they're not going to be able to get any tax deductions at all whatsoever. So this is what is the difference in a trader and an investor. So traders trade in stock and securities for their own account. So, you're not giving it to someone else and they're trading for you. That would be considered an investor. So all gains from the sales are treated as capital gains. So 0 to 20% in capital gains tax. And you can naturally offset your losses from the income. All investment expenses are treated as business expenses and not as itemized deductions. So this is a really, really big deal. You want them to be treated as business expenses, so you want to be a trader. Traders are also exempt from the investment interest limitations, just as dealers are, because they're deemed to be in business. So there's some interest limitations that you may not have to deal with today, but understand that you're exempt from those. Those investments or the trades are not subject to Social Security tax, which is huge. That's 15.3%. Traders must trade on a frequent, regular basis to make sure they qualify training is crucial and deductible. So understand the training events that you're going to, even as a customer, you get to write those off on your taxes, and transactions need to continue throughout the year. So you can't just say, okay, I'm gonna trade for 3 months and I'm gonna stop and I'm gonna claim, business deductions throughout the year. You really need to be trading consistently. And the greater the volume, the better. So the more you trade, the better it is for you to be able to prove that it is a true business expense. So this is something, as I continued to share with people, they just couldn't put together the numbers, like what is a traditional employee and why is it so much better to be a business owner. I'm not telling you to quit your day job. What I am telling you is to start a business, is to have a home-based business so that you get the massive tax deductions to go along with it. So employees, they earn an income and then they pay taxes, and then they purchase their necessities after tax dollars. But business owners, they earn their income, they purchase their necessities, and then they pay taxes. And here's what that looks like. So if you have an employee who makes on average of $50,000 a year, they get to subtract their standard deduction, which now is $12,000, to say they're single, and then they pay taxes on that adjusted gross income. So the 50 minus the 12 leaves them with $38,000, which is their adjusted gross income, and they're going to pay about 39.65% in taxes with that. So that means that they're going to pay about $15,000 in taxes, and that's leaving them with a balance or take-home pay of $34,000. Well, then they have to buy all their living expenses. So what we found is, on average, there's $53,000 a year as far as cost of living. So you see this minus $20,000 in living expenses. What those are true expenses that you can actually write off as business expenses. So those living expenses can be redirected, and you'll see that in just a second here. So just say they have $20,000 living expenses, that leaves them with $14,933 left over, and they still haven't bought the actual essentials, groceries, and things like that. So as a business owner, you have the same $50,000. And you could be an employee with a home-based business. It does not matter at this point. So that same $50,000 minus the $12,000 for the standard deduction, then we get to deduct these business expenses. See, they're the same thing. The living expenses, the mileage, the maintenance, the phones, the internet, the meals, childcare, vacations, travel, all of those are the same expenses, but now they're redirected into business deductions. So we deduct that $20,000 from the 38. We're left with $18,000 as our adjusted gross income. So now that puts you in a lower tax bracket. So you're paying on average of 28.65% in taxes, and you're bringing home way more money. So you see the single as opposed and the married, and the difference at the bottom is $9,900 for single, and you've got about $6,200 for married. So as you make more income, naturally you can see that this becomes a huge, huge deal. So it also allows you, I haven't even gone into play on the earned income credit and the child tax credit, that if you have children, it can be a really big deal to be able to decrease your taxable income by $10,000 or $15,000 or $20,000 a year. By having this business, it actually allow you to get credits that you may have not qualified for to begin with. So here, I have people tell me all the time, well, I was told this, I was told that, you can't write off a business if you don't have an income. That's not true. If you're attempting to earn an income, and what does that mean? That means sharing what you're doing. That means trading. If you're just a customer, that means going to events, attempting to earn an income. Then these things are tax deductible. All of these business expenses I talked about. And here's some of the actual IRS publications that I was able to obtain the information from. Naturally, there's a lot more out there, but if someone tells you that you can't write these off or it could trigger a red flag, it's just not true. So just take that advice with a grain of salt, and, go and find out the information on your own if you want to do that. Now, how can you save money right now? So I have people all the time say, I would love to get started in my own home-based business, but I just don't have the money. So if someone has the money to at least get started in the business or start trading, they can do that immediately, and they can start saving money in taxes. But they can also, if they don't have that extra money, you can change your exemptions by 2 on your W-4 at work if you're a W-2 employee. So what does that do? If you are receiving a refund right now from your employment or from your tax return during the year, then that means you're overpaying in taxes throughout the year. So instead of receiving that refund, why not take that money now so you can actually change your life? So, that money could help you start a business, and, you're not receiving any interest on that money. So why not go ahead and take it right now? And then also going back, amending tax returns is another way that I've found, thousands and thousands of dollars in refunds for people, for them to be able to change their life. I'm just amended a tax return a couple weeks ago. It was $33,000 that the client overpaid. So I was able to take that money and help him get that money back and be able to start using that to grow their business. So, you can contact us. We'll be happy to help you, walk you through those steps on how to amend your tax return. So in summary, there has never been a better time to start your own small or home-based business. And IML is a great way to do that. Not only does it allow the education that you need, but also you've got some amazing leaders that, I just love, near and dear to my heart. And then also it just puts you in a different category because of the capital gains taxes as opposed to ordinary income, and because customers can get tax deductions. That's just huge. So take the deductions that you're entitled to, and they will lead to massive tax savings. The other thing is hire your spouse and your kids so you can get additional tax savings, and do not do your own taxes. I can't stress this enough. I actually had 2 clients this year that told me, Courtney, I've been doing my own taxes on TurboTax. I don't think you can get me any more money back. The difference in one was $20,000, and the difference in the other, and he had a associate's degree in accounting and told me he knew all about accounting. The difference in that one was $4,000. So just don't do your own taxes. And if your accountant says that you can't write off these deductions and it's not true, then read the tax code yourself and find someone else who can help you. Now, what can we do to help you? So if you are wanting to contact us for a free tax strategy session, we are happy to do that. We will send you a link so you can book a 30-minute conversation with me, and so I can help you save $4,000 to $8,000 a year, or we can help anyone and we will actually have this webinar available for you after I've recorded it, so that you can send that out to your team and friends and family, whoever you want to help. And then also, if you feel like you've overpaid in prior year's taxes, then you can send that information to us, and we will be happy to review it and see what we can do to save you some money. Most clients that I see, it is about $10,000 in missed deductions at least. I've seen some that are upwards of $50,000 in 1 year in actual taxes that people have overpaid. So we can definitely help you there. And then if you've not filed your returns or have not paid all of your taxes, the biggest thing, I people that feel like they're so scared to file their tax return, but understand that there's not a law against not paying taxes, but there is a law against not filing your taxes. So it is imperative that you file your tax returns. Even if you can't afford to pay it, there's always offering compromises that you could deal with, that we could help you with. But then also, once those have been filed, even if it's old prior years, if you owe money, we can go back and look at those years and see if we can find you some money. So, you know, if we can help in any way, we would love to. I appreciate your time. And, you know, if you have questions, please reach out to us and we'll be happy to help in any way that we can. And I appreciate you being on this webinar, and I'm going to open it up for questions if I can figure that out.